get a lot of questions from franchise prospects about capital and within the New Again Houses franchise, and we thought this would be a good way to describe that relationship, maybe going back to the beginning of that relationship and how all this started, and then what it looks like and kind of where we're going.
Green seafood.
Green seafood.
That's where it all started.
It is.
Lunch 8 years ago?
Well, it's December of 2012.
Wow.
So
10 years ago.
9.5. Yeah, we're in our 10th year working together. Wow. That's right.
We're still putting up with Matt.
So Sam, you were there in the beginning for that, and when you look back, where were we leading into that chance meeting at the seafood restaurant?
That's when we were working hard to scale. So we were trying to grow the number of houses we were flipping a year, and we were struggling with leaving cash behind, right? That was probably our biggest complaint at the time. We were working with institutions that you had known previously. How had you set those up?
Yeah, local banking relationships that I had developed, yeah.
So we were working with some of those. We were leaving cash behind ourselves and trying to understand how to generate enough cash to grow to the next level, and then chanced into meeting Mark at lunch and had known him previously.
When you say leaving cash behind, what do you mean by that?
I'd say a combination of construction overages. If you went over budget on a job, you couldn't get that money funded after the fact. Closing costs, and then marketing for the next job, just a capital intensive business. And so as we tried to scale that and grow to the next level, it was easy to leave a few thousand behind on each job. And then when you're scaling into 4 and you did 2 last month, it's easier and easier to leave money behind you.
Yeah. And when I think at the time we were probably doing around 12 to 15 houses a year.
Yeah, probably on pace for that. That would have been right at the beginning of that. I think we did 7 to 15, something like that.
So when we were leaving cash in a deal, whether through a down payment or an overage, like that really accumulates over the course of 12 to 15 houses and becomes a bottleneck. Yeah,
and your cash chunking on the other side. You only get paid 10 times or 12 times a year, and so it's hard to maintain cash flow when it's coming in chunks and you're turning around and spending it on the next house.
Yeah. And Mark, when thinking back to that meeting, like what was going on with you leading up to that?
Well, as Sam mentioned, it was late 2012, and I just happened to be at that restaurant by myself having lunch, and Matt and Sam walked in, and I'd known Matt maybe 6-8 years at that point in time, and known Sam for a few years at that point in time. So we already had a relationship, and I invited them to have lunch with me, and we sat down and talked for 3 hours. At the beginning, it had nothing to do with business. It was just a completely chance encounter. But for everyone to know is I came out of the corporate world and was at King University as a professor. And part of the reason I wanted to teach was to help future generation of business people. And so I'm always on the alert for helping a young startup business. And as you guys were talking about your business and I was asking lots of questions, I kept getting more and more excited about what you were doing. And I could tell you were capital constrained, the issues you were having to fund the deals and the cash flow of the deals. At that time, what really intrigued me about your business was how you had re-engineered the cash flow equation to back into how much you could afford to pay for the house. And you were very disciplined with that. At least that's what you said, that you were very disciplined. If you calculated you could pay $50,000 to buy the house, that's all the more you would pay for it. You wouldn't go beyond that. And so that was really intriguing to me, how disciplined you were with the business. And even way back then, 10 years ago, you were very disciplined and used a lot of data to inform your decisions and system and process oriented. I liked that you had an Excel spreadsheet that had all the hours in there for estimating the work on construction, I liked how you calculated the after renovation value, what you thought you could sell it for after the renovation, and then you backed into what you could afford to pay for it. So that was all very intriguing to me from a business point of view. And so I went home and talked to my wife about it, and I think I called you about a month later and said, Matt, would you be interested in me bankrolling your business to help facilitate your growth? And I think it was January of 2013 is when we struck our first deal where I committed an amount of money to fund 2 flips. And we've grown from then to now. I'm managing almost $15 million committed strictly to New Again houses and the franchises. It's just really amazing how we've grown since Greens.
And successfully flipped hundreds and hundreds of houses in that time period, and now changing the lives of franchise owners on a case-by-case basis. And I know we've talked a lot about that, but that's kind of the most rewarding part at this point, is getting to see the stories of the guys whose lives are transformed for the good, getting to start a business through that funding opportunity.
Right.
So I think it was that spreadsheet went on to become software that has been working to turn flips into a math problem.
Still miss my spreadsheets. We'll work with the software.
That was an ugly spreadsheet that you
real
that you remember.
For that. Yep, real affinity for that.
And it was Mark. It was you that really pushed us to the franchising model. You remember?
Yeah, I remember vividly as early as 2013, where every time I would come to your office, that little bitty shed of a building where you started out, virtually every time I come, I say, what you guys are doing is so unique. We need to think about selling franchises eventually. And I remember having the thought is, they're getting mad at me for bringing this up every time because they just don't see it yet. But I think about 2015 or so, you saw the potential, and from there you started building out so that you could sell franchises.
Yeah, and then launched that was 2015, I think, where we moved into this building and really got serious about franchising.
Yeah.
And then 2019 launched the first 5 franchises in 2019. And when you talk about those several hundred deals that we've done now, Sam, you've been involved in most of those deals. Can you talk about what that looks like now? Because now Alta is not only funding our deals here locally, they're funding all of the franchise deals. So what does that look like?
The process is focused on the software. So a franchise owner in another location looks at a deal. They're interested in pursuing it. They may need different levels of support depending on their background and their knowledge base. So they submit a support ticket to us with that property, and we pull it up in the software. We've got coaches and kind of analysts trained here to go through the software and their budget and the photos and look through the property through the lens of all of our prior experience and their backgrounds, and then we provide that kind of ongoing kind of hand-holding level of support on a deal-by-deal basis. And then turn it to Mark. So Mark's kind of looking at us to sign off on it, saying, yeah, this meets our historical expectations. We feel like this is a deal that we can justify through the lens of the software, through the formula that we use to flip houses. These numbers match up, and the guardrails of the system are acting as protection for everybody in the deal. And then that kind of goes to you. And then you have the conversation with the franchise owner on the specific funding terms and how that deal will work out and the timing of it. The timing's always a challenge.
Yeah, from my point of view, I rely on your systems and processes that have been developed over the last 10 years, and I fully understand, having worked with you for 10 years. So that underwrites our willingness to provide capital to the franchisees. Many of these franchisees don't come with construction background. They don't necessarily come with all the tools to open a franchise, but you train them and you give them all the tools and set the boundaries, the borders, so that they have less chance of failure. And so I'm relying on your work to underwrite me loaning them the money. But even with that, I still go to Mastermind and I look at all the numbers to see if this makes sense. Well, the franchisee didn't tell me they were putting in an HVAC system, but I see a lot of money here for the HVAC. And so I'm looking at the numbers, looking over the shoulder, and then I'll go into the media folder and look at all the pictures. And so I'll do that, and if it all makes sense from my point of view, I'm probably loaning money 98% of the deals that come to me. So the vast majority, the few that I don't loan money on are those that go outside the boundaries of our typical deal.
Right.
And it's been working extremely well. Through 2021, we've had 428 loans pay off with no defaults. So I think what we're doing is working well.
And the software has changed the presentation of it, but the formula has stayed largely the same. And we've always been focused on what numbers comprise the best way to evaluate any given opportunity, and then how do we get to that deal. And you made a good point there, to avoid the emotional entanglement, because that's, especially when you're starting off and you've got that sense of desperation that you want to get a job going, being forced to articulate it through numbers is a really healthy guardrail for new franchise owners. That's what everybody depends on to keep the job safe and keep that deal going.
We've had this relationship for quite a few years, and it's easy to take it for granted, where the capital and the franchise is separate, but it's very close connection. So Sam, you're looking at these deals from the perspective of franchise owners and the practicality of getting a deal in a competitive environment. What do you think are the real competitive advantages that this relationship creates?
It's cash. Well, it's twofold. It's the cash on the buying side. You have to be able to move quickly. You have to be able to close with cash. You're not doing home inspections. You're not waiting on an underwriting process for 30 days. It's a clean, simple, fast process. It's easy to explain. Everybody understands it, and it's attractive to sellers. So that's a big piece of it. And the second piece, for franchise owners, I think, goes back to their cash flow position. They're not having to make interest payments. They're not having to bring an excessive number of points to the table to close. They're reasonable interest rates. So it not only helps them be profitable on a deal-by-deal basis, but when they're starting off, they're cash tight, and it keeps the cash from just being a constant drain on their resources, working with third-party lenders who have different requirements, and that's huge as they're starting off and then trying to scale their businesses.
Yeah. Well, not just starting off; it's the scaling part as well. Is 3-4 years into owning the franchise and they're growing the business, they need access to even more capital. So they're just as much demand for having access to capital several years into the franchise as there is in the beginning. Selling the franchise, you're selling the systems and processes and the back office support. But I think having access to capital is a very important component to the franchisees for even having an interest in purchasing the franchise. Of all the franchises that you've sold, there's really only one that came to the table with their own capital.
Without any expectation of having access to capital, absolutely. And it's a capital-intense game. There's third-party lending companies, but you can't go to your average bank and say, hey, I'm a great guy with a good business model and I built a spreadsheet. Will you give me money for a foreclosure? That's not how that's not going to play out well. So it's a crucial part of selling the business.
I think a lot of people in this business or going into this business think that the cash issue is a temporary thing, and once they sell a few houses, it'll take care of itself.
Right.
But back to your point, like it's a problem that never goes away because once you get into real estate investing, you're always selling one house and wanting to buy two houses, and then selling two houses and wanting to buy four houses because the deals are valuable. And so I think a lot of people are surprised that the capital piece is probably more valuable when they were at our place when this relationship started and we were doing 12 to 15 a year. looking forward, what do you see? What's going on with Alta Capital now? Like, what are you doing on a weekly basis?
A lot. Just this weekend, as an example, I had 3 or 4 requests for proof of funds. We've got franchisees that are trying to make offers on houses, and whoever's on the other end, the seller or the seller's representative, saying, well, do you really have the money? And so they need proof of funds letters. Just this weekend, there was 3 new opportunities for buying houses. A couple of them were out of the norm, so I had to do a little additional work on those. I'm getting construction draw requests on a routine basis. Got loans paying off, new loans we're putting in place. It's not 10 hours a day every day for me, but I pretty much touch this business every day. There's something going on virtually every day that I help with a little bit. It's pretty exciting to me to be involved in it and work on it. But looking to the future, Alta Capital Management needs to go to the next level. I probably need to hire an administrative assistant to help with a lot of the administrative detail, and I need to do more marketing to bring in more capital partners. We haven't talked about that much yet, the potential capital partners.
Tell us what that looks like.
Well, just to go back to the beginning, it was me initially, just my money, but then it started working so well, so quickly. 1 year into our relationship, I could tell that we had potential to work together long term. So I started bringing on family and close friends, and then family and friends of you and others. We've really grown organically to this point. Gone from the beginning $250,000 to $15 million, to say it again, $15 million now. But it's all been organic to this point. I wrote a note to somebody this weekend. I've got a new investor as of April 1st who is a friend, or is the brother of a friend of a nephew of my wife. That's the farthest connection we've ever had to a capital investor. It's always been just one removed connection. And so we're starting to expand our circle. And so that's really what Alta needs to focus on, is expanding our circle of contacts to bring in more investors. We'll probably need to be to $18 to $20 million by the end of this year, and growing 30 to 50% per year to keep up with your growth on the franchising side.
Yeah.
And so we'll have to do more marketing to capture additional investors.
Yeah. You're bringing a lot of new money into that fund every month. What do you think? What is drawing investors in? What do they value about this particular investment?
Well, it's the story that we've just been talking about, but distilled down into 15, 20 minutes, telling them the story of New Again Houses and how it's formula-driven, data-driven. They really are drawn to that story, just like I was 10 years ago. And they like that we have provided a steady return. Over the last 10 years, it's been a little over 10% return per year. And so they like that steady return. It's a whole lot less volatile than the stock market. It's a much better return than bonds or other income-generating investments. And so they're just attracted to the story and the return and the low level of risk. Just for everyone to know is we loan money on each and every house. It's not just a blanket loan to you. We're loaning you money on each house, and we're named on the deed of trust of every one. And so very, very secure.
I was going to ask that. Do you get that sense of added security from potential investors just knowing that there's a physical property?
Absolutely.
Yeah, something that's tangible that you can actually
just a contrast from the market.
touch.
Yeah.
So I get asked that question routinely by potential capital partners is, well, what happens if they don't pay off the loan? Well, that's never happened. But if it does, then we've we've got that as collateral. We can take possession of the house. We can either try to sell it at that point in time, or we can keep it as a rental until such time that we want to sell it. And so we've got that house as security, and that's pretty important to the investors.
I know you're if you look at your resume, you're an engineer by trade and a numbers guy, and you would have never done this had the numbers not worked.
Exactly right.
But I also know you well enough to know that it's not that what's meaningful to you is not the numbers. It's the people involved. And
Yeah.
as it's grown, have you been able to, as we've increased the numbers, I know you've mentored a lot of our franchise owners and been a really valuable resource on the business side. Have you been able to continue that as the system has grown?
Yeah, I'm glad you bring that up. I talked to one of the franchisees just this morning. I called him at 7:30 his time, and he was just finishing up his devotional. And so we got to talk about his devotional a little bit. And so it's important to me to have relationships with your franchisees. They're all removed. They're not local, so I'm not having breakfast or lunch with them. But I do talk to them on the phone and exchange emails. And I've said it about you two before, and I'll say it again, is one of your strengths is the way you attract high character people to work with you. That was part of why I wanted to work with you guys way back in 2012 and 13 is I already knew you to be high character individuals. And that's important to me now is that the team you're bringing on at New Again Houses and the franchisees that you're bringing on are all high character people, and that's important to me. And that's part of what I talk about with the potential capital partners is the relationship that we all have. And you guys are family to me. The franchisees are family to me. My capital partners are family to me. And so the relationship is very important.
Yeah, it's a mutual thing. Like we talk a lot about win-win relationships, but our businesses are all tied up together, and I think in a lot of ways the unifying part are the people.
And it's a big part of our process. I mean, we're committing to a 10-year relationship as a minimum when we sign a franchise owner app, and that has to be somebody that we want to answer the phone from, want to do business with, and are excited about what the future holds 2 years and 4 years and 10 years down the road for them. So the person is a huge part of our screening process. We're not just haphazardly selling franchises everywhere we can. We got to support this person, and we want them to be successful, and we want to be passionate about that.
Yeah,
I appreciate that approach to franchising because not all franchisers do that. Their approach is, just throw it up against the wall, and whoever sticks is somebody that's going to be successful. They'll sell 20 franchises knowing that 15 of them are just going to be failures, but they just want to get the franchises out there. And you're being more selective, more discreet with who you bring on board, and I really appreciate that.
Yeah. Well, it's always been about, I feel like this business is unique because it's not only about the income. I feel like there's an income potential there and to be able to have a quality of life. And we've always believed that quality of life is related to the people that you're involved with. So it's good to be in a business where you can have some control over who you work with.
Yeah.
The team that you build.
Yeah, you're choosing your team. I've heard you reference that before as one of your favorite parts of this business is that you get to choose your team, and you're very intentional about that. We all are, and that's why our businesses are growing in the direction that they are growing.